Friends of Women in Tech. My name is Pacey and I'm the event lead for Malaysia Women in Tech. I would like to welcome you to today's workshop, Harnessing Blockchain Enhancing Inclusion, presented by Ms. Farah Jaafar, Managing Director and Chief Communication Officer of Fusang Corporation. We would also like to invite Mr. Erno, co-founder of RINNE Technologies and treasurer of Malaysia Women in Tech, as moderator for today's session. Before we proceed, just a few housekeeping reminder to mute yourself while the presentation is ongoing. And if you have any questions, please post your questions in the chat box below. There will also be an interactive Q&A sessions along the way, and also after the presentation, you may turn on your video and post the questions if you like. Without further ado, I would like to hand over to Ms. Yuki Aizawa, our Malaysia chapter ambassador, to kick off with a few words. Thank you.
Thank you, Pacey. A very good Sunday, everyone, wherever you're from. Warm welcome and thank you for joining us tonight for our second workshop, online workshop. I'm Yuki, leading Malaysia chapter of Women in Tech Global Movement. We are still a very new chapter, which was born 2 months ago. And there are 26 chapters all around the world currently. I'm personally very, very excited tonight. Blockchain is very close to my heart. I think it's a very interesting topic, of course, and especially so that we're talking about the inclusion part. And tonight, Miss Farah, she is definitely the one who should be delivering these messages, and I'm really excited to have her. Now, I'd like to introduce my team in terms of the membership. Rafaela is our membership lead. If you haven't been a member already, she will tell you all the exciting things that we're having for the future. Rafaela, without further ado, I'll pass it to you. I think you're on mute.
Unmute, please.
Hi everyone. I'm Rafaela Katayama. Thank you very much for being with us tonight. Women in Tech works toward empowering women and promote diversity and inclusion. And I'm sure today's our speaker, Ms. Farah, show and guide us into this journey further. I hope you enjoy this time and please become a member. And now I will pass it back to Erno, the moderator for tonight. Thank you.
Okay, very good evening, everyone. Let's jump into the very exciting topic. And as Yuki mentioned, one thing is blockchain, definitely. Lots of news, lots of information, and we will come back to the topic with Farah, because sometimes the contradictory information and sometimes you have the spinning about the various topics and subtopics related to blockchain. But the other reason I'm super excited is because we have somebody speaking, somebody who is not only versed in blockchain, but is coming from financial in the industry. And that's the combination of these two, I think, is the most exciting part of the use cases the blockchain technology presents nowadays. Myself, I'm also coming from banking IT industry. We are running with my private company. We are running solutions on blockchain. One of them is finance related. So more so the whole topic of blockchain and financial inclusion is very close to our heart. Let me introduce Farah, and then as Pacey also mentioned, Farah is the Managing Director and Chief Communication Officer of Fusang Digital Securities Exchange, basically the first of that kind, or approved and by authorities in Asia. She will let us know more. I'm also, as much as I did, of course, research at the website, I really want to know more about how the day-to-day activities of such an exchange are working. And Farah is having a very strong background with financial institutions. She was CEO of Lab One, IBFC, which is the marketing and development and the market development arm of Lab One Financial Services. She was linked to Asian Institute of Finance and Bursa Malaysia. So perfect person to talk about the financial parts as well. Now, let's start. Farah, we had a short discussion earlier today, and we identified so many topics. I'm pretty sure there will be questions as well. I think maybe let's start with the topic of inclusion, how the blockchain generates inclusion and financial inclusion or any other type of inclusion in the financial space and the society.
Thank you, Erno, and thank you, Women in Tech Malaysia, for this opportunity, Yuki and everyone. It's always been very, very exciting to see more growth with regards to women in tech generally. I mean, historically, you'd know that STEM-related subjects, they are generally more male-focused. And so as an extension, tech and the blockchain and the whole digital space tends to be more male-focused. But I think that balance is changing slightly. And I think the more noise we can make about women in tech, the better globally. So thank you for this. And, you know, I'm very passionate about pursuing the growth of women in tech for sure. Now, inclusion vis-a-vis digitalization is always very exciting. And actually, I think one of the things that I think, Erno, you mentioned earlier about how I've been working in financial services industry for a very long time. Actually, since I graduated at 24, I'm now this year 51. So that's my entire career actually in financial services. And what I've noticed until about 5 years ago is that because of the way financial services are, legacy financial services is structured, it's very easy to create more wealth by the wealthy. And that is because it is harder for the less wealthy to digest sizes that are required for the markets to run properly or more efficiently, I guess. Now, that changed with the advent of distributed ledger technology, which then reduced, well, actually eliminated the possibility of double counting. I think it's important that everybody understands that there is a lot of versions of digital. In fact, what we've done at Fusang is one of the things that we're very passionate about is educating the masses about what is digital, right? So you have a digital clock vis-a-vis an analog clock. Is that digital clock digital the way we are discussing digital today? No. The way we are discussing digital today is very much about the elimination of double counting in order for us to ensure that there is a trace of ownership that cannot be replicated. So it's a very safe environment that we're talking about when we talk about the distributed ledger technology. Now, the beauty of it is that it's the technology enables us to break down what we call in the business ticket sizes of things, i.e. the size of an investment requirement. So let's say, for example, in order to buy something, you must have 10 ringgit because 10 ringgit is the minimum amount that particular product comes in. Distributed ledger technology, by creating a clear audit trail, which then creates the blockchain, which then creates a clear audit trail, allows for that $10 to become $1 by breaking up the pie, the size of that product. Now, once it's $1, immediately you and I can buy it. Immediately you and I can share the benefits of owning it. And that's why inclusion is so important. The concept of inclusion is embedded within the distributed ledger technology. And that's why it's key. So I give you another example, right? Fintech and the facilities that are created by fintech on the back of distributed ledger technology allowed for Africans, right? And this is where it all started, actually. Fintech actually all started, my understanding anyway, where it all started, it started in Kenya via M-Pesa. So, you know, if we were to look at our our personal moves in digitalization, i.e. we used to go to the bank and then we had an online banking account, and now we use mobile, either mobile money or mobile apps. In Africa, on the back of distributed ledger technology that facilitated the fintech revolution, they went straight from a physical bank into mobile money. That is the power of the blockchain. It allows for inclusion. Suddenly, everyone in Africa had a bank account. And how beautiful is that?
No, that's perfect. The roots, I mean, that's one of the roots of the fintech, as we see now, and it's evolving with an amazing pace. We also know we have information on how the blockchain started and the use cases, how they started to become more and more serious. So obviously blockchain, again, maybe we will have a discussion or you will touch upon this about the cryptocurrencies. Most of the people, they will associate blockchain with crypto, while it's much more than that. Myself, for example, never touched crypto in my life as much as I'm running blockchain-backed solutions, 2 of them with my company. I never bought one. Yeah, I should have done. I know. A few years back, should have bought a few bitcoins. But the technology itself, I think, and the use cases are more important, and that's where the direction we want to. We really create a more open digital economy and more inclusive.
Yeah, I think there is a lot of noise with regards to cryptocurrencies, and that noise, some people feel is valid, some people less so. But what's important to understand, I think, as part of general awareness, is that blockchain does not equate cryptocurrency, and cryptocurrency does not equate blockchain, right? The blockchain is the engine of cryptocurrency. That's how I look at it in my non-technical way, right? It's the same as you could take an engine of a proton and put it into a mini and vice versa. That doesn't mean that that is the only way that engine will work, right? The same engine would work based on any chassis. So the point is, I guess, it's important to divorce blockchain from cryptocurrency, number one, because blockchain really is an entire revolution. The blockchain creates, the ability of the blockchain to create the elimination of the double counting from the blockchain allows it to create an automatic audit of everything that's being done, which creates then a very flat distribution network and ability to tag pieces of assets to people, right? So it's important to divorce cryptocurrency from blockchain, i.e. that is not the only use case of blockchain, i.e. cryptocurrency. For example, in Fusang, what we are trying to do is to actually tokenize. So the blockchain allows for tokens, which then represents shares or equity or interest, whatever you want to call it, or even debt, for example, right? Which is an asset, right? In a particular entity, right? That token then creates a direct link of ownership to a portion of that asset. So if you were to look at it as a pie, and we cut the pie into 1,000 pieces, right? The blockchain allows us to tag ownership of those 1,000 pieces to 1,000 different people. That's one thing. What's more important to remember is that that tagging cannot be changed, right? That tagging cannot be changed because it's immutable. Now that then creates fractionalization. That means it creates bite-sized pieces for everyone to have a little piece of, which then creates the ability to lower the barrier to have a piece of pie, which then creates inclusion. So everyone is able to enjoy the pie and have a very clear line of ownership to that piece of pie that they're enjoying. Now, that is how a non-digital, technical, computer geek like me understands how the blockchain works. Via tokenization, which creates fractionalization, which creates that little piece of pie that then tags to your ownership. So the whole idea of inclusion is embedded into this concept. But of course, there are a lot of people out there that are not interested in the inclusion element. They're interested in the efficiency that this technology can create. And I think this is what you guys are working on, Erno, at your unit, your company, about creating proof of concept and use cases for how the blockchain will be able to create a more efficient business process, right? I think that's important. But for me personally, I feel that we are still stuck in the old way of thinking with regards to how we use the power of blockchain. And I like to give an analogy here, okay? If you look at Islamic finance, right? Islamic finance uses the concept of conventional finance and creates an Islamic layer to it by making it Sharia compliant, right? Now, if we take legacy financial systems and we just wrap it in a blockchain wrapper, we're not using the beauty of blockchain. We're not using the true power of blockchain. And I think in a lot of instances, we are limited by our imagination. We are limited, especially old fogies like us in the business, we are limited by what we understand and what we can conceptualize. This is why it's so important to ensure that there's a huge runway of talent that's coming into the business that doesn't necessarily carry that legacy baggage, right? And I personally think that the more women join this business, the fresher the ideas, because whether men like it or not, I think we look at it from a very different perspective. We look at problems quite differently, and we are by nature, and I hate to use this word so abusively almost, by nature more inclusive in the way we think and the way we function. So yeah, I don't know if I answered your question, but I think what I'm trying to put across is that while we understand the benefit of the blockchain via tokenization and the immutability of it and the fractionalization, I think there's a lot to be said about the mindset change that's required with regards to how we look at the power of blockchain vis-a-vis existing legacy systems and how to improve it.
Well, perfectly agree and understood where you're coming from. It's I was working, and similarly to you, from beginning of my career, I was working banking IT solution, and still the big legacy systems, which were, by the way, inefficient even 10 years ago, or maybe even more, they're still ruling the market. So it's a way to go for blockchain-backed solution to replace them, because it's of course there is a resistance from the big players. Let's not go there, but you're right that I think the use cases, the more and more come out and more clear to the people that how this can help and how this really work. And there is not really just a cloud in their head of what really blockchain is doing. What is that, like distributed ledger? The ones that become snowball, and basically they see the end product, and then it becomes economically viable. Then it really will fast and or it will be much faster the acceptance. Now we will come back to the. I'm still very curious, and maybe in this second part, when you talk more about Fusang, you can explain about how real process of tokenization is working on a daily basis, and especially on how you launch it on the exchange. I think we discussed also earlier, one more thing is that the inclusion part also means that, and using your analogy, you can't buy the whole pie, or let's say, put it another way, you have some small money to invest, and as you said today, with negative interests, you can't even keep in the bank. Hello, Japan. So you get back less than you put in. So what the people will do is using this tokenization, getting with a small money, 10 ringgit, 100 ringgit, they can buy ownership in something which is really will get a good yield, so good money.
Yeah, I mean, I think one of the things that I've noticed over my last, well, throughout my career, is that when you have money, it's so much easier to make money. And I have spent a lot of my career until I joined Fusang doing that. You know, starting out as a stockbroker, working in a stock exchange, you know, very capital market centric. And, you know, while banking is very lucrative, there is a lot more money to be made in the capital markets, I promise you, because it's a wholesale environment, especially on the issuer side. Now, I think that what can happen with digitalization and tokenization is that we can, you know, if there is enough political will amongst the financial institution, that, you know, the masses can, and this is why awareness is so important, right? Because it is the masses and it's the public that will demand these products being brought to market. And these are products that, for example, have been historically only open for subscription by large corporations, right? I give you a classic example, well, two classic examples. Number one, the bond market. Now, the bond market provides for fixed coupon rates, i.e., well, they call it coupon rates, but really it's an interest rate, okay? It's a fixed interest rate. Your principal is guaranteed, okay? But you have to have a huge investable amount in order to participate in that market, right? So you tend to get only institutionals, entities like businesses, institutional entities that come in on the treasury side in order to participate in this very safe, very lucrative market. Now, why does that happen? That happens because there is an inability of the legacy systems in order to distribute to a bigger audience, almost a bigger market, right? A more retail market. And that's because how do you cut up the bond pie, as it were, right? To go back to my pie example, how do you cut up a bond pile? It's impossible, right? But with digitalization, right, harnessing the power of blockchain, you'll be able to. So why not? Why not digitalize a bond? Why not tokenize a bond so that 1,000 pieces can be bought by you and me, and we can all enjoy a guaranteed principal and a guaranteed interest rate, right? That is one example, right? The other example is a money market instrument, right? In Malaysia, for example, there used to be a tax-free money market instrument that would generate about 7% interest if you had, even as a person, more than 1 million ringgit in investable assets, liquid. Why shouldn't that be for you and me, right? Just because we don't have 1 million doesn't mean we don't have 50,000 to put in, right? And we should all be able to enjoy it. So I guess that is what is important to remember, and that is harnessing what I call the harnessing of the power of blockchain towards inclusion, yes, but also efficiency. Now, the problem that then creates, in a way, when you start opening the market up to mass affluent or even retail, is that you have to ensure that there is a very high element of investor protection. Now, the issue is a lot of global regulators, actually most global regulators, are not able, ready, willing, I don't know, you pick a word, all right, to regulate this space. And what has happened is that retailers, mass affluent, that don't necessarily understand the downside risks of investing, right? Without the knowledge of the downside risk and without full knowledge of the power of this technology, will start investing, right? Because they believe everyone should invest. They've heard their friends, you know, a typical situation. Oh, you know, that's one thing that I learned in my first 4 years as a broker is that nobody talks about when they lost money on a market deal. Everyone will talk about how they make money. And so the impression is that everybody makes money, and that is not true. I was an institutional dealer for 5 years of my life. Every institutional player is looking at a retailer to exit the market through. Now, I explain what that means. In every market, there is a buyer and a seller. An institutional seller needs a buyer. The buyer tends to be less informed and tends to be retailers. The only reason an institutional player or an institutional investor would like to exit is because there's no more profit to be made. So why does the retailer go in and buy when there's no profit to be made? I think there is a lot of education to be done on two sides. Number one, understanding how markets work fundamentally, and then understanding a very important principle that we discussed, Erno, this afternoon, is that in the digital space, whether it be some digital asset exchanges that are not regulated, unlike Fusang, or in a crypto exchange, which are even less regulated, there is no inbuilt investor protection mechanism necessarily. So the term buyer beware has to be quadrupled, tenfold, I don't know how many times magnified in the digital space in order for everyone to really understand the risk. I give you an example of that risk, okay? In a legacy, typical stock or exchange environment, the price feed of that exchange is internally generated, i.e., if you go to Bursa Malaysia and you buy a stock, the price of that stock is generated by the buy and sell equation on the Bursa Malaysia, and then Bursa Malaysia shares that price information to the public. Okay, so it's internally generated. It's almost as if it is a cake you made yourself and you're selling it at your own coffee shop. I like to use analogies like this because I think it makes it a lot more easier for people to understand, okay? Because I tend to explain a lot of things to my son. And my son is like my threshold. So if an 11-year-old can more or less understand this, I think it covers all of us for sure, right? So if you take Bursa Malaysia as making the cake and selling the cake, they can be responsible for the ingredients in the cake. Okay? If Bursa Malaysia, if, for example, a crypto exchange does not make its own cake, if a cafe does not make its own cake but takes a cake from someone else, it is inherent by default that they will not be responsible for the quality of that cake. And if you buy that cake and the cake gives you a tummy ache, chances are the cafe will disclaim their liability. They will say, oh yes, I know I sold the cake to you, but I bought the cake from someone else, and that person is then ultimately responsible. It's not me, even though you are sitting in my cafe and I am servicing you. Now, this is the situation of most crypto exchanges. And it's very important to understand that in order for users of crypto, traders of crypto, which seems to be everyone. Yesterday, I met friends' sons, and they're all 18 to about 20 or something like this. Everybody had a wallet. everybody was trading. Everybody, right? Without actually understanding that there is a higher level of investor protection that is required if you were to expect the same protection in the normal stock markets or the normal markets, the legacy markets. So the crypto markets especially tend to be less regulated, and it's very important that users of these exchanges, everyone understands that there is more of an onus on them to understand the liability that the exchange is willing to foot, right, with regards to anything that goes south, I should say, right? And this is an extension also to this buzz market at the minute, which is the NFT market, right? So the NFT market is something that everyone talks about. Everyone wants an NFT. But if somebody is really truthful with you, they'll look at an NFT and say, okay, so I bought an NFT. This is really cool. I've got a gorilla NFT or whatever you want to call it. What do you do with it, number one? What is the utility of an NFT, right? It runs on a very strong tokenomics model, which I don't want to go into because that's quite technical. But a tokenomics model basically means that you try and generate more interest in a particular digital asset class in order for the understanding, awareness, and buy-in of that asset class to increase. So the price increases, and then remember, like an institutional, you exit. Please remember that, okay? Now, I go back to my pie vis-a-vis NFT. With tokenization, the power of DLT that creates the fractionalization, small pieces of the pie, you have a direct link between your wallet and that piece of a pie because there's a clear legal representation of that digital asset through that token to that piece that you own. When it comes to non-fungible token, they tend to be, non-fungible tokens are digital assets, yes, but there are a lot of different types of assets, right? Everything is an asset. Debt is an asset. I think a lot of people don't understand that debt is an asset. So if you look at a balance sheet, debt is an asset, right? But everybody looks at it and thinks, it's debt. It's something you owe. How can it be an asset? But it is, okay? Accounting standards, since time immemorial, has said that debt is an asset, okay? A lot of people don't realize that. Now, what is the asset class generally of an NFT? NFTs generally are based on something that is less tangible, i.e. a piece of art, for example. Now, lawyers in the room will tell you that there is an asset that is embedded within a piece of art, and that asset class is intellectual property, like a trademark, right? So if you have a child, and I keep bringing Adam back into this conversation, for him going into Fortnite and buying an Adidas cap, that is an NFT in a way, because what he's done is he's gone in, he's bought an Adidas cap, right? But Fortnite has gone into a contract with Adidas to allow for the intellectual property of that to be created within the Fortnite metaverse. Okay, so that is completely legitimate. How do you ensure that the NFT you're buying actually has a legal right? Now, there are two elements to that question. Number one, do you care if there's a legal right? As a buyer, do you care? You might not care, in which case you're thinking the price is going to go up. I'm just going to do a punt, which means I'm going to speculate and I don't care about that asset quality, which is fine. There's nothing wrong with that. We're not here to judge, okay? Different people invest for different reasons. Some people go into the stock market with no intention of settling at T+2. All they want to do is sell before T+2 in order to gain that margin. They do a contra trade, what is called a contra trade, okay? And you might want to do that for an NFT, that's fine. But if you are actually wanting to own a piece or an extract of that piece, of that art piece or that IP or that trademark, then you have to ask yourself, how is that NFT linked via asset quality through the intellectual property of that asset? Now, I think this is something that a lot of people who are starting to invest in NFTs need to understand. We're not judging people who are not interested in the intellectual property element of an NFT, number one. Number two, if you are interested in that link to a tangible asset, legally, you have to look out for it, because most NFTs don't have that link. So that's why for me, this whole idea of digitalization, while it's so important and it creates inclusion, because it creates inclusion and it lowers barriers to entry, so we can all be, so we lead a more equitable life. What happens is that unless there is a very strong push towards investor education, a lot of people might find that they are investing based on a misrepresentation. Now that is very dangerous, by the sheer fact that digitalization allows for inclusion. Now, do you see the irony in that? Right? More people can invest, but unless they understand, they might end up with the short end of the stick. So that's why, to me, investor protection, investor education is very important, right? And yes, you asked about Fusang, and I segue into that because more than Fusang, Fusang obviously is important, but I'm very passionate about investor education in order for everyone to understand that there is a very different level of protection in the legacy market structures and the digital market structures. Now, having said that, you do have options like Fusang that are fully regulated by a regulatory body. So for example, I got to know Fusang from my last job at Labuan International Business and Financial Center. And they are fully regulated by the Labuan International Business, I should say, are fully regulated by the International Business, Labuan International Business and Financial Center, which is a subsidiary of the Malaysian MOF and adheres to all the international rules. And we are regulated to serve the public and private markets, i.e. sophisticated and retail. Okay, now what I'd like to do now, if we have some time, do we have any time actually, Erno?
Yes, sure.
Okay.
Please continue, it's super interesting, and
so
I think a few slides, yes.
So let me see, do you see that?
Yes.
Okay, right. So what we have here is an intro to Fusang, okay? So you see here, we're quite clear. Hola. Okay. I need to minimize this. Okay. We're quite clear that our vision is to enable stakeholder capitalism, okay? By turning stakeholders into shareholders. For example, our CEO, Henry Chong, has this vision that it should be as simple to buy the shares or the stocks of a company that you like as easy as it is to buy the products that company offers you. So for example, you go to Lazada, okay, and you buy a cream, because I bought some face cream today, so that's the top of my mind. You buy face cream, you like that face cream, and you think, actually, do you know what? This face cream works really, really well. Now, you know you're going to buy more face cream. Why wouldn't you want to buy stock in that company as well? Tokenization, the DLT and tokenization allows for you to do this, for you to do this globally 24/7, and it allows you to do it at a small ticket price, i.e. a small price to enter, to have a little bit of your pie, right? So that is what we mean by enabling stakeholder capitalism, by turning stakeholders into shareholders, okay? Our mission, end-to-end platform, allows all investors to gain access, previously reserved for only the largest institutions. So again, Fusang is very much about inclusion. As you can see, it's our mission, okay? So B2C, direct market access, so DMA, democratizing access to all assets providing transparent fees that are lower than any investment platform allowing crypto. So we allow for crypto, obviously, in the sense that, you know, it's an end-to-end structure, which means we will allow for crypto to be used to buy our tokens that are traded on our exchange. We are operating in 4 environments, and actually we have a very strong tech team in Vietnam as well. So we're across 5 different areas in Asia. We're very Asia focused, but our range is really global. Now, how do we do this, right? Fusang has been in the works for almost 5 years now, and we decided that in order to have a fully licensed digital exchange, we needed to do end-to-end. We couldn't just create an exchange platform. What we needed to do is really create a Fusang digital identity solution, okay? So whether you be a corporate investor, and this is on the right side of the slide, whether you be a corporate investor or qualified investor or retail investor, you go through an online eKYC structure. We go through identity management, KYC, risk management, billing, reporting, compliance. We built that Fusang digital identity ourselves, okay? And it's an end-to-end 2 MFA system. So it's not as simple as you would think in that sense, like I go online, I open an account. No, it does take 2 days for us to ensure that you are fit and proper, in the sense, not fit and proper, but you pass our know your client rules, that you're not on any of these world check lists and all the rest of it. And then it's like opening a bank account. Okay, bank accounts are no longer open immediately as it used to be. It does take some time, and it's the same when you're opening your account on Fusang Exchange. Now, when you have then your account, you can go in, deposit, and then start trading on this Fusang Exchange. And there are 2 markets on the Fusang Exchange, which is the private market and the public market. Now, the private market is open for qualified investors. Now, qualified investors are investors that are deemed to be sophisticated. That means they are not retailers. That means each country actually has different stages and criteria of what is deemed a qualified investor. So in Malaysia, the Securities Commission of Malaysia determines what a qualified investor is. And if you are a Malaysian, in order to come onto Fusang Exchange, you can. If you want to trade in our private market, which is a lot more sophisticated, so you have, bigger ticket sizes, bigger entry sizes and stuff like that, then you will have to be a qualified investor based on the criteria of the country of your domicile, right? So you trade on the exchange, and then we have Fusang Vault, right? Fusang Vault is a fully licensed custodian service provider. In Fusang, we have 5 licenses that we own in order to create these 3 verticals. It looks simple, but it's 5 licenses, okay? In Malaysia and in Hong Kong. And to be included soon will also be a Fusang Trust and Management Company, which is already licensed but not operational, and also a fund management company, in order for us to actually take an issuer, wrap it in a fund, tokenize the fund, and distribute it on the exchange, right? When I go to Vault, then I go to the left, the rightmost version. Sorry, I'm left-handed, so I get everything confused, excuse me. So I'm left-handed. We use the right side of the brain. Everybody else uses the wrong side, is what I always say. So on the right side, we have Fusang Vault. Fusang Vault really is like your CDS, your central depository system, which is your clearing and your safekeeping of your tokens and your assets. So corporate investor accredited. So as you can see here, right, these yellow boxes remain, orange, gold boxes remain the same. It's the systems at the bottom that are different. So that goes into the authentication system, into an Enigma engine that makes sure that your digital identity then links to the vault, which then gives you the hardware security model that rests on the blockchain, and we use the Ether blockchain to do that. There is talk within the tech team in Fusang that eventually we'd like to create our own chain in order for us to be completely end-to-end, as it were. But that's still in the works, obviously. So what we offer here is a unique true value proposition to stakeholders. We provide a fully licensed, regulated, protected environment, right? That's fully integrated, as you can see from the earlier slide. We allow for market access. So this is taken from an issuer and investor. Now, what's important to remember is that in any market, you will have an issuer and an investor, and the market really is an app that brings everyone together because the issuer needs funds and the investor needs somewhere to invest in order to gain a return, right? On the left-hand side, you have what is the benefit really to an investor that's fully licensed, i.e., read into it, protection, okay? Investor protection. Fully integrated, read into it, ease of transaction. For the issuer, which is on the right-hand side, you have market access. So we have access to both private and public markets, and it's 24/7, okay, global. And we have a one-stop shop solution for investors to trade both traditional and alternative asset classes. And the reason we can offer asset classes is because we use the power of blockchain in order to tokenize. So imagine gold, which is historically extremely an illiquid asset class, right? You can take gold, tokenize it, cut it into the pie, small pieces, and everyone can have a little bit of it, right? And start trading it. So Fusang delivers all these critical elements through a single platform that brings together issuers and investors in a digital format and allows for tokenization using blockchain technology to create smaller bite-sized pie pieces, I guess, is the easiest way of explaining it. So I just worked through this slide, actually just verbalizing it earlier. As you can see here, you have capital market access, right? Low capital market access, high capital market access, company size, small and large. The issuer has problems. Their problems, their pain points are excessive floating costs, excess shortfalls. So growth stage companies are exhausting private funding venues. That's why you can see a lot of legacy markets now, they open up SPACs, right? Which is the rigor. And SPACs actually don't have historical performance in order for you to buy into, very much like the digital market now, actually. And you have limited liquidity. For the retail investor, you have very high transaction costs, restricted investment opportunities, right? And channel shortfalls. So retail investors may want to invest in upcoming companies that you know will be the next Google, will be the next unicorn. And yet they can't access these opportunities due to lack of market infrastructure and channels. And really, the lack, aside from infrastructure and channels, is the way the legacy markets have been structured. If you look at legacy markets and how they've been structured, it's been very, very clear that you need track record, okay? So you need historical performance data in order to list on an exchange. Now, we all know that historical performance doesn't mean future performance, and that's why SPACs have gotten such a lot of headway, right? And that's why private investors, you know, private venture, private PE, what we call private equity in the business, has always made more money because they invest in the promise of a company, right? Imagine 20 years ago, Google wanting to list on an exchange. That could never have happened. The reason Google grew is because they went to private equity markets, that are wholesale markets, and came in and looked at the promise of the business and made a bet on it. Now, that concept is now available to everyone. And how beautiful is that, right? Because now we are able to buy into the promise of the potential of a company, not just based on history. And when we buy into the potential of the company, we buy at a lower entry price. Okay, so all these things, you know, are really magnificent. When you look at it and you think of how inclusive all this can be, it is fantastic. The problem is, as I go back to the most important thing, which is investor protection and investor understanding of how markets work. That's fundamental, right? So again, this is global investor access, simplified business operations, optimize issuance costs. Now, the other thing is that when you start looking at a tokenized environment, because we don't have, about 1 million pieces of paper flying all over the place, and because the systems are all flattened, I guess, within a solution and is a lot more efficient, the issuance cost is very, very low. And the trading cost is very, very low. So you have investor access 24/7, and this is again for issuers, right? So on the left-hand side, the benefit for issuers, which is investor access, global 24/7, you have simplified operations and you have optimized costs. And for the investors, you have market access, instant settlement. We don't have a T+2 system. It's instant, right? And product access. So obviously, because a lot more companies can come to us because of our reduced issuer costs, there's a wider product suite that people can come in and invest into, right? So this is 5 steps to listing on Fusang. This really is a slide that details how you'd list. I mean, this is not something I'm going to go through because this is very much for, we work with a lot of accelerator programs and startups, and we explain to them how we would take them from their corporate journey at the present moment into a full listing and how much that will cost, how long it will take. And because Fusang is part of a larger group of companies within Asia, we're part of the Portcullis company secretarial network. And Portcullis is one of the largest company secretarial, company management, and fund management entities within Asia. We're able to take a startup company and structure that company in the most list-ready environment before they go through our sister company called Portcullis, before we then take them through the tokenization process and the listing process on Fusang. So really, for an issuer, Fusang offers a very clear end-to-end. In fact, Fusang also has an investment bank, which will allow for us to place out when we are fully operational on that end. And that's called the Basian Investment Bank, which is also licensed in Labuan, that will be operational quite soon. So as you can see, with our company secretarial arm, our investment bank, and our tokenization and our issuer management function and the exchange platform, we do offer an end-to-end solution for potential issuers. That means when I say issuers, I mean companies that are looking to list. And they don't have to necessarily be companies that have that track record, right? You will need some kind of profit element, and you will need to be able to show that your business does have that potential, that X value, but you don't necessarily need 5-10 years historical audited records in order for you to list on a digital exchange, okay? So really, we've jumped the hurdles by starting a company and raising our funds ourselves. I don't know if the audience knows, but we were going to launch, in order to create a proof of concept, we were going to IPO our own shares on our exchange. But the Ukrainian war broke out and the market just absolutely collapsed. So we have decided to defer that IPO because we really wanted that IPO to show everyone how you would take a company like Fusang that doesn't necessarily have that track record. It has the kind of funding that's required for it to run for another 10 years or whatever it is, true private funding, but doesn't have that track record. Take it, list it, tokenize it, and trade it on our own exchange, right? So we've jumped the hurdles of starting our own company and raising the funds ourselves, right? The process was larger and harder than it needed to be, but we decided it was time to map out a new route, right? Not for ourselves, but for everyone, really, for everyone to understand how this can be done, right? And why do we do it? Number one, we believe in inclusion, right? We believe blockchain tech solves the pain points of traditional fundraising. And we have streamlined through our technology and the years of building those blocks that I talked you through, sorry. We've streamlined the processes, okay? And we've taken time-sucking tasks out of the hands, right? So this is for an issuer especially. And we allow for the investors to focus on investments and the issuers to focus on the business. And we want to build a community. We want to build a community that believes in the power of blockchain in order to facilitate inclusion and create a lower barrier to entry, a lower benchmark in order for you to start trading. We want to build a world where we're becoming, as I said earlier, a shareholder will be as easy as buying its products online. So really, that is the raison d'etre of Fusang. That is why we're here, because we believe in the power of technology and we believe in inclusion. And that's really what I wanted to share with regards to Fusang.
Thank you, Farah. It's amazing ecosystem, actually. It's really includes everything I was imagining about the process of issuance and purchasing and listing and as a custodian and settlement and everything.
Yeah, but you know, Erno, I have to say that it's extremely complicated, because what we're trying to do is create a middle ground between legacy capital market structures and pure digital exchanges, right? Because we want to reinvent the capital market by using the power of blockchain in order to really create a seamless environment for both the issuer and the investor, and create an inclusive capital market. And that's why you'll find that a lot of people that work in Fusang, like me and all the senior members of EXCO, have all come from legacy financial systems. And we're all sat there thinking, we understand the need to reinvent it.
Yeah.
You know, but it's tough. It's not easy.
I mean, putting this together, definitely. Immediately, the following question came into my mind. You mentioned that there are some P&L elements in order to be able to be listed. What if I compare to a traditional, let's say, fundraising platforms, or let's say crowdfunding platforms? So what is the additional elements you have to have as a company in order if you want to get listed? And definitely not as much as the current IPOs in Bursa or anything else, but where in between we are.
I mean, we're looking at $1 million US. That's all, really. Because there are two options here, right? So you have the private market that you can go into, or you have the public market. When you go into the public market, obviously it is taken like an IPO. So if you look at our IPO, if you Google us and Google our IPO, you'll see that actually what we did was we went through a typical IPO process. So we went to the investment bankers, we did all of that. And the only difference was that we were going to tokenize our shares and list it on our exchange. Now that is a typical public market offering. Yeah. Even on a digital exchange, the client protection element is so embedded within what we do that we follow the IPO process and the requirements of Bursa Malaysia. Okay. The investor protection and the processes, not necessarily the track record, because we run our own exchange. Okay. So that is on the public side. Now we work with a lot of accelerators like Brink, for example, that's tied to the Animoca brands. And what we do with them and their cohort is that we talk to their cohorts, their potential companies, the companies they're investing in, the companies that have taken under their wing under the accelerator program. And we say, look, you need to have $1 million. We need to be able to look at your company requirements. You need to go into one of our exchange members and see if they will take you on as someone that they would underwrite, maybe, and then come in and start the whole listing process. Now, that listing process on the private market is a lot less time consuming, because the prospectus is for qualified investors. And because it's for qualified investors, what happens is that the requirements of public disclosure are less, number one. Number two, it allows for a middle ground, right? So if I go back to my example, and stop me if I'm getting a bit too complicated. You have the retailers here, and then you have the huge treasury big boys investors here. But you have this middle level of investors here that are what is seen as the middle swath, right? Now, the traditional capital markets, book building kind of club, as it were, like let's say when you do a club deal in a private market environment or in a closed door environment where you go out and you just place out certain elements, you do a swap, equity for shares. You go only to brokers, investment bankers will call around their little books and their little friends and say, do you want a piece of this? Yes, okay. There is no transparency whatsoever. It's done just by, would you like to buy a small piece of this company? This is the potential, right? And this is how it happens. Now, what we're trying to do is take that and put it in the middle space. By listing it on an exchange, what you're doing is you're creating more information out there. You're creating a transparent marketplace, even at that higher ticket price, as it were, not that retail price. So that is the beauty of our private market. In the private market space, we have competition, okay? Most digital exchanges have decided to go only via private market space because, and in Fusang as well, we are quite focused on that market. And I'll tell you why, because we're very careful and we want to ensure investor protection. When you go into the retail space, that level of investor protection and understanding goes down. And so we are concerned, right? Because this is a cake that you're buying from our cafe. This is not, and we've made that cake. So we have to be careful, right? So in the private market space, Temasek, for example, owns an exchange that does this as well, but only in the private market space and is licensed by MAS, right? That's the only other competitor we have in Asia, I believe, and it's called ADDX, and we're good friends with them because we understand that in order to grow a market, we need to work together. But yeah, so that's the difference between the private and the public side, and that's the public side will require a lot more historical track record. The private side does not. The difference with equity crowdfunding is that it's transparent, and like any other exchange, you are able to create a secondary market. Now, okay, there is the primary market, which means that this is, you list it, and then there's the secondary market, which means that other people are listing it on the secondary market, like a house that is sold 2 or 3 times over. Now, the beauty of a digital exchange, even though it's a private market, allows for secondary trading, right? So yeah, I hope that was not too technical, but.
Well, I loved it, especially I was working with banks, so hopeful, but I'm pretty sure it was understandable for everyone. So basically you took, in terms of technology, you took the blockchain and used it to make the processes more efficient, faster, easier access, etc. So that's where the blockchain component is important.
Yeah,
and
I mean, your stock, like your share certificate. Yeah. Our share certificate, you can go and what, in the markets is called a cap book, which is a shareholder of registered shareholders. Ours is on Etherscan. Yeah. So you can go online, go to Etherscan and check who owns Fusang immediately. Yeah. That transparency is fantastic, right? A lot of us think that we're trading online because we're trading Bursa Malaysia stocks online, but there's nothing that is digital about that online environment, right? Because the back end is full of paper. The share certificates, even when you trade, even though it's online trading, as an ex-trader, I can tell you, the contract note is still a piece of paper that the trader needs to punch in and out. Huh? Don't forget that.
Yeah.
A digital exchange collapses all that into one system.
Yeah, it's perfect. Yeah, I think it's those they did trading earlier, or you went in a bank or trying to buy even the mutual funds. They know that it's lots of paperwork,
lots of paper. Yeah, lots of paper.
Amazing. And let's not forget, and I come back to that. The regulation part is important. So you give protection to the investors, and then we can go one step back to the earlier topics. When you go out and you try to or start to buy NFTs, and let's not blame only the NFTs, even the crypto itself, you don't know where you're going. You don't have any protection. The moment you bought, it's in your wallet, sayonara, it's whatever happens.
I have a lot to think. Well, personally, I have nothing against crypto, and I actually do like USDT related coins. I think, you know, being able to tether it to something that is in fiat helps, especially when we are at this level of development of digital currencies. But I think people need to understand that digital currencies involve a burn rate.
Yeah.
Absolutely. And burn rates are not necessarily, information about burn rates are not necessarily shared, right? So again, you know, the onus is on the investor to understand what is the burn rate for Binance, for example, right? Which they've changed, right? And they change it every so often. There is so much information that you need to digest in order to make a proper value call investment decision in order to, when you deal in the crypto space. It should come with a huge health warning like a cigarette pack, right? It should. I'm not saying it's bad. I think it's good. I think we need to have stable coins, and I think we need to have an alternative to fiat. Yes, but we need to also make sure at the same time that, you know, investors are not hoodwinked into things that they are not ready for. And, you know, I always believe, like everything else in life, you know, the truth is always in the middle. And so, you know, we need to find that middle ground as we develop this space.
It's true. Education is there, should be there. And what I've seen, because even myself, I just tried to, not long time ago, I started to look at NFTs, but maybe I'm old. But
I'm old too.
The steps going to open a wallet. Okay, maybe it's a too late comer, but after that, to go to minting, understand how to list on OpenSea and how's the dynamics are working, and understand the whole concept of the community, as you mentioned yourself, is basically because you have to create a community, extend, and create the value of the token NFT by community hype. So
yes,
everything's so complicated, so complex, and there are lots of people that are doing very well in this scene, and they're making huge money. But what about the others? Even the biggest gurus, NFT gurus, are saying that he was saying, or our good friend George was saying during the presentation, that even as now as I'm speaking, there are 3 scams running on Discord. It is. So that's why the protection is important.
It's very important. It's extremely important. And you talked about OpenSea. And I think, you know, everyone watching, I think you guys should Google OpenSea and fraud, these 2 words. And OpenSea at the end of last year, OpenSea is for the uninitiated. OpenSea is the largest NFT market in the world.
Yes.
Almost 80%, 90% of all NFTs are listed on OpenSea. And when they say list, it's not like an exchange list. It's just like a website with a listing, literally, is my understanding. You can trade on it, but there isn't the requirements in order to satisfy a listing process. Okay, should I say? It's like listing your property on mudah.com. That is like what an OpenSea is my understanding. I might be wrong, okay? Is my understanding, I'll qualify that. Now, OpenSea at the end of last year said that 80%, as a public health warning, said that 80% of all NFTs listed on their own exchange or their website, if you want to call it an exchange or website, were frauds. 80%. So this is something that the exchange themselves came up with and said, right? Again, because they wanted to ensure, right, health warning is out there for everyone, right? Because it gets to the point where people will start looking at the exchange or their website saying, why are you promoting this when this is wrong, right? So in order to kind of mitigate that potential, they issued this statement. Right. So I think people need to understand and be very wide open about the risks that are involved in investing when there isn't a clear line to link the token to an asset class.
Yeah. And what this brings us to some people are saying that the blockchain should be decentralized and it's working and no basically control needed, which is a contradiction of what we are talking about, but exactly the real life showing if you don't have controls, like now the NFT, but don't blame only the NFTs. We had the ICO phase where the
NFT situation now is what ICOs were 4 years ago.
Yeah,
it's exactly the same. I mean, 4 years ago, when I entered this market, it was ICOs, and I was like, what is an ICO? I didn't understand it at all. I didn't understand it at all 4 years ago. And then a good friend of mine, Anson, who runs Access Singapore, or now Asiata, said, okay, sit down, have a drink, let me explain this to you. And when he explained it to me, I was like, you mean you write up a 3-pager and you get people to buy into this company that this is an initial kind of, yes. And everyone was into it because it was so hyped up because the community was, you know, and then 4 years later, you look at NFT starting last year, right? Last year, everyone wanted an NFT for Christmas. It's like, it's ICO all over again. And it's a question of time before that kind of dies down until the next one.
Like ICO converted into STO. So when the government suddenly said that, hey, it has to be regulated.
Yeah. I mean, that's one thing. When I was running Labuan IBFC, a lot of the people came to us and said, we want to issue an ICO in Labuan. And we were like, no, we can't do it. We will take an STO and we will give you a license to issue an STO, a security token, right? Issuance license. But we will not give you an ICO because what is the asset, underlying asset, right? So that is the thing that's important. And yes, you're right. You know, at the moment, you know, there will be a move towards STOs. I think STOs are tokenization of assets is the way to go. I think also there's a lot to be said about public blockchains and private blockchains. Private chains are essential because fortunately or unfortunately, we don't live in a utopia world where people will be true to themselves and will take care of everyone else and all the rest of it. So there will always be a certain level of protection that's required, but that doesn't mean we can't use the blockchain in a private environment. And then there are certain environments that will demand a public chain. So I'm all for the joint use of public and private chains, depending on what's required.
Yeah, perfect. Okay, well, this topic could be continued for days, but I have a few questions, if you don't mind, to be more specific, and maybe if you have others. John was asking if you want to learn more in blockchain and pursue a career in blockchain, what would be your advice on where to get started? What kind of skills are in demand and how to prepare?
Well, I have no idea. I'm sorry. I don't know. To be honest, I kind of fell into this business into this industry from the job that I had before, which forced me to learn about the business. Right. So I think it's all about curiosity. I think, you know, for example, there's so many titles out there. And that's the other thing that really attracted me to this space is that everyone is very open and sharing in the digital space, you know, as opposed to legacy space where everyone is very self-centered. So I think if I were John, what I'd do is start joining, you know, reading publications that talk about the blockchain, talk about the developments within the STO. You just have to Google it. You can go, of course, to our website. You can go to our Fusang website, and what I'll tell you to do is not look at what we're offering, but look at our news section and look at the news agencies and the titles like Cointelegraph, for example, where we have appeared. Now, these are reputable online media that focus in this space, right? Although it says Cointelegraph, for example, right? Just as an example, it doesn't just focus on coins, right? There's also a lot of on the blockchain. There's also this company, this trade title called Forecast. Forecast is run by Angie, who's a good friend of mine. She used to be the CNBC lead anchor woman, and they are very much on tokenizing assets. It's called Forecast. You just Google Forecast News, Angie, or Forecast Blockchain or tokenization. And we ran a series with them called Tokenizing the World, because we think that everything can be tokenized and should be tokenized. So Forecast is great. And yet, Ritendra is saying Stanford Online, absolutely. Khan Academy does that. There's so much online resources about the digital space that actually is quite easy to find. And the only caveat I would say is that if it sounds too salesy or too gimmicky, then chances are it's not true.
I agree, as everything in life actually applies here as well. Now we have another question from, or a question from Ritan, and as usual, the question itself is so complicated that I had to focus to read it. Thank you, Ritan. It says recent publication of IOSCO, International Organization of Securities, IOSCO, yeah, of Securities Commission has said the relevant risks include where a trading platform give preferential treatment to some users, offer advice to customers related to an asset in which the trading platform may have an interest. And what has been your approach to remediate this? Or I don't know if it is relevant to your trading platform. So
I think it's a hard one to answer, because that also happens in a legacy system. It's not just a digital thing. So for example, I used to be an institutional dealer at a broking house in KL. Now, that same broking house, I would trade for the client, but I would also trade for the house account, right? Which means that this is the trading account of the people in the company as well. So there's always that, there will always be that conflict. You know, I think one of the things that we are clear about is that we don't have a house account. We are clear. And I also feel, and this is something that is important, when you have the cap table, i.e. the list of shareholders, the capital table, the list of shareholders on an Etherscan or an online, immediate live online environment, you can go in and check who owns it. Right? So again, the onus is on the investor to go out and look, right? But as far as the exchange is concerned, we have the conscience not to do it, but not all exchanges will have that conscience, right? Now, again, the onus is on the investor to go out and say, look, I'm going to go on the Ethersen, or I'm going to go on the cap table, the live cap table, and actually be able to see whether this exchange, right, or the people that own this exchange also own shares in this company. But at least, unlike the traditional systems, this information should be available online, right? By the very nature of the business. So I guess, no, it will be hard to confirm and guarantee that all exchanges don't have this conflict. But at least in order to research whether such potential conflict may arise, the investor can do their research online. Does that make any sense?
That's to me. It's what written says. Thanks, does. So.
Okay, good written.
Yeah. We have a comment from Amina. Thank you that blockchain council offers certification for those who are interested, but it's more on technical side. So it depends. I think it's coming to Jones. If you want to learn about the technicalities of blockchain, there's so many courses available there, and so many blockchains. For a matter of fact, I think what I did before we launched our solution blockchain, I understood the not the technicalities, but what the blockchain can, where it can help. Look for a few use cases, then you will understand where it can help, and then you can come up with your own use cases later, because it's still we are at the beginning of the journey to some extent, and there are so many things we can do with the blockchain. So maybe that could help. Look for use cases. Take a look at where blockchain is being used, where it cannot be used, because there are examples for that as well. So that's that. So any other questions? I don't have any more. Slowly we are reached to 1.5 hours, and then was an intense one, and I enjoyed every moment. It was really, I knew it will be a super interesting topic, and hope you all enjoy this as well. If any last comment, Farah, maybe anything else?
No, I mean, if anyone wants more information or whatever, please feel free to reach out to me. I'm on LinkedIn, or my email is there. So yeah, I hope at a very high level, I've managed to kind of explain it so everyone can understand what the concept is about. It's very interesting. I personally am looking forward to the last bit of my career, I guess, in this space. And really, it's the way of the future. It's not just about cryptocurrency. It is about changing the way we structure, operate, and share, you know, and that's important.
Yeah. Thank you very much, Farah. It was very educational, and that was our goal actually. Our workshops, we always want to discuss topics which are either cross-industry or course-industry, and educating the people about what's going on. We will probably never have very technical presentation or workshops, because then of course the nature of our membership is from people are coming from very different backgrounds, so we want to give them a nice overview. So I really love the concept blockchain and the financial industry and how the digital exchange worked, and as much as I see the ladies smiling, we will have this as discussed this workshop online in our Women in Tech. We will, those that are following us, they will, on our members, that we have this information available, so that where they can watch. And I, as our membership team said, I suggest that to follow us and to check your emails, and the membership emails will let you know where is our next workshop. As far, thank you very much, and I'm pretty sure we will meet each other in additional workshops, because the topic itself and the follow-up discussions are pretty sure needed, and we got a few suggestions. Thank you for that, or what could be the next topics. It will be both blockchain, both financial industry and other STEM, because as you yourself mentioned, the STEM itself is not only, let's say, not only blockchain. We have engineering, we have so many other topics to discuss, and we will tackle as much as we can, humanly possible. Thank you, and thank you very much for for your time, Farah, especially. Thank you, team. Thank you for attendance, for all who made it at this late on Sunday evening. And keep in touch and have a lovely night.
Thank you, everyone. Thank you, Farah.